Hello, welcome to today's update. I think I need to do this update for us to align our thought. Let me quickly start with DXY. Remember, on the DXY, we add this run to the downside, and we saw this as a possible correction of the entire run to the downside. And that where I believe that we may have finished the last leg to the upside. And that these that we are getting here, it looks like the price wants to correct to break to the upside. But you have to be wary of that because looking at the structure, it doesn't look like that. And that's why I'm doing this video. After the run, we agreed that we have finished this entire run here. And this could be the beginning of a change of trend, or that we are having a big correction to the downside on the DXY. The same thing on the US dollar index. So it now depends on how this unfolds to the downside. Before we should be done correcting this to the downside, I mean, before we change direction, at least we had to do like an 100 equal extension to the downside, which we are still far away from. And this is the weekly chart, okay? So now, with that said, if I go to the daily chart, we know we still want to come down. But the question is that, are we done here? These are gone up collectively on the weekly time frame. You can see the nature of the candle and how small. You know, to think that this is going to gain momentum and continue to break to the upside, I doubt that. If you look at the number of candles that came down from here, that's 1, 2, 3, you know, within 3 weeks, it came down. And so far, we've gone up 1, 2, 3, 4, 5, 6, 7. So it's highly corrective. And no matter what you are seeing on the lower time frame, we must not be fooled. And what we want to do and be sure is that it's not as if we're still going to take this top. We take this top or not, we need to understand what the price is trying to print and be in the right direction of trade. So if I now go to the daily time frame on the DXY, so we still believe that our direction of trade is towards the downside. So are they going to go up or not? Now, herein lies the answer to these questions I just asked you. When price got to this point and it was consolidating here, oh, you will think that, okay, because this is an uptrend and this much of the consolidation may mean that price is going to break to the upside as after wedging wedging down like this. But because we knew that we may have gotten to the end of this, counting the inner structure of this wave, we may have gotten to the end of this, and we may actually be changing to the downside. And so we got this move. Now, the way you look at this, because you have to look at the possibility of a WXY correction for further upside. And in case it doesn't work like that, then you will know, because you may have thought that if this is a correction, so this may be AW, and this may be an X, sorry, yeah, AW here. Yes, an ABC, okay, or AW, okay, yes, okay, this is the fourth wave, so this is okay, this may be, yeah, this is the fourth wave, this is like a W, X, and a Y. So if it's going to pull beyond that correction and it's going to continue to do otherwise, you would know. Now, the same way we look at this, that's the same way we are looking at this on a lower time frame. So seeing this WXY on this time frame, we are going to look at this. This is the daily time frame. We're going to look at this area on the lower time frame. So let me quickly switch also to our instrument, euro dollar. Now, it's the same thing here, just inversely correlated, okay? So we are looking at this being a possible AW, X, and a Y for further downside. That was what we thought. It could be AW, X, Y for further downside. Not until structure began to break to the upside. So I will show you the inside of this and go back to that point so that you understand what I'm trying to say. So in a WXY, so if we are calling a W, X, and a Y, we are calling it to further decline because we are taught that the price had been selling, that they might want to come down the more. So if it's a W, the low of X must not be taken if we are to go up. Okay, so but if it's a W, X, and a Y, it means that we are coming down. So if indeed we want to move up, that means we should not take these, then it will now become a 1, an A, B, C, and we are going up. So the same way we are going to count, we are having two alternatives now. The first alternative is to count as if we are coming down. The second is to count as if we are going up. So if we take this as the first move and we're looking at A, B, C, that means we are going up. So that means our C is to the downside and we are going up. But if we think that, oh, we are coming down and we say this is a W, a first move of correction, and not, it is not, and it's like we are thinking that, oh, this is like an X and a W, a Y, it means that we should be coming down. So, and with that, it means that from this low to this height here, which is this height here, back to this low. So the 100 was first breached by this. So that was very suspicious. A 123 and a 161 eventually was taken to the upside. So we must know the way price is trying to navigate to the upside, even though at first it was like, oh, they were dragging over how many weeks before eventually price broke to the upside. But the low of X was never taken, regardless of whatever. So at the end of the day, it became a 1, A, B, C, and it went up. So it was never a W, X, Y for more cut to the downside. Now, having said that here, we are going to also be wary. Now, we are going to look at this structure in times in line with what we are seeing there. So if I go to 4-hour time frame, so we're going to now look at these the way I said about the price. So which means that if we had to go up, we should not take the low here. Because if the way it's wedging and it's wasting time here, price could just break to the above and continue to move, before you know it, you not catch it. And in case they are coming down, they will kiss this low and break it. Once they kiss this low and break it, fine. Our order is at 380 or so, or thereabout, below this low. So that means our order should be safe if we put it at 1.0400, or even if you break even. So we should not see this low taken. That is what we are saying. We should not see this low taken. So the best will be just break even on your order. And in case it takes out us out, that means they want to go down, because they actually could break to the upside. That is how to begin to navigate now. So we are going to look at this as a possible W, X, Y for us to push a downside, or a 1, A, B, and a C. And this may be going up, because this actually may just be an AC and we are going up. Instead of taking that, oh, it's a complex W, X, and a Y, and we are coming down, it could actually be, this might be the first move of 1, because after this, that we are taught that this is like a 5, a 4, and the last wave here. So this may be a 1, A, B, C, and we are going up. Whatever is, whichever is right, if our going up is right, we are not going to take this low. But if we are still coming down, we are going to take this low, and price is going to fall badly if that is going to happen. So, but I would just tell us that let's just stay where we are, while we are hoping the price is going to push to the upside. So don't go and give yourself a stop loss below here. It doesn't really make any sense. If price takes this low, you're not going to lose any money. Then we're going to look for another opportunity to buy once we are done if price takes too low. So with what I said now, so let's now take it again and say that this is like the beginning of the move to this point of blue, which is like a 1 here now. Or even if you are saying that it's a WXY, back to the low of a B or a possible yes. So it means that even if this WXY to the upside, price almost touched the Y before coming down. But if it is a 1 and A, B, C, what we decide is when we break 161.8 here, then we now know we are going up. So we need to break 1.08500 to the upside. Once that is broken, then we are back in an uptrend. So this is the point that will confirm that we are back in an uptrend. Now, so we are counting to think that this is a 1 and a 2, and we are going to break. So if we should take this low, the low here, it means we are coming down. We are coming down. It means that we are coming down. If you should take this low. So we need to see the kind of engage and interplay or whatever the price is going to do here. This is the point that you want to stay here and not move your stop loss. Maybe just right on where we had our our entry. So and we break even there. But price potentially, based on structure, could go to the upside. That is what I'm saying now. Price could go to the upside. I looked at the appearance of this price action here, and this is highly corrective. Whatever we are seeing here is highly corrective. When you see correction like this going on for almost a week, it might be a good recipe for us to go back on our trend. So we are going to be careful. So I think that is what I just want to pass here now. So I think I've said more than enough. On gold, looking at gold, there is a whole lot happening here. There is a whole lot happening here on gold. It is also corrective. It is also corrective, but price may take, because even if you are taught that, at first we thought that this is like a 1 and this is looking like a 2 to this move, and this 2 has become something else. We took this eye, we broke this eye at this point, and it's like we are beginning to take lows again. So that is what is worrisome on gold. You know, we thought that this is a low here, and at this point we turn to the upside and higher low, and these, and also up to recently, this also became an higher low, like 1, 2, 3 in a series, and we just broke it. So breaking it means that we still have a little shift to the downside. So, but all this move is correcting this. That is what I can say for now. Is it going to come all the way down and break and take this low? I don't think so. I don't think so. But how far can this go? Now depends on what we can see. I think with the price action here, price looks likely to still go a bit down. So the best is to take this as an A, B, and we are going to have a C. So, and in having a C, we are looking at an 100 extension of this move to the downside. And in that case, it will be A, B, C, and 100 extension. So we are going to be looking at price action for us to go up at that point. Another way of looking at it is to treat this entire run from here, a 1, 2, 3, as an A and a B. So, and the one that is going to come down from here to be a C. In that way, that is going to be more bearish, which may still go down by close to about 300 pips. Let's see, with all that I've said. So all that I've said now is that if we are thinking that this is an A and this is a B, a C may be coming here to about 1978, which price may not actually tick, because when you look at that, then it won't become a 2 anymore. Though it will be an ABC, but in terms of fib relationship that we expect to have with this, is going to fall below 90. So the best approach is for now to take this as an A, B, and a C. And in that case, if you're taking an A, B, C, then C is going to be here. So we are looking at the possibility of price coming to 1994, or let's say around 1995. That's the first thing you can do. Look at price coming to 1995 or 1994, 200 area. And if price does not hold there and there's no a change of pattern there, we can now probably look at, oh, the price may sink further to this point. And with that, I've come to the end. But we are still looking up. We are looking at all the mess they are creating here. But we are still, you know, going up. All right.